95 News. I'm your host Abhishek and I'm back with another episode of Quick Stock News. In this episode, we showcase top stock news from all around the world. Before we get into the news, I request our viewers to please wear a mask and maintain social distancing, as the battle against COVID-19 is not over yet. And remember, this is the time we fight the virus together. Now, the news in detail are: China's economy slows rapidly as COVID-0 lockdowns bite. China's economic activity contracted sharply in April as the lockdown of Shanghai and other areas around the country to contain a widespread COVID-19 outbreak closed factories, snarled roads, and stopped people from consuming, escalations concerns about the further disruption to global supply chains. The slump was widespread in April, with factory output contracting further and services demand much weaker than forecast. The Purchasing Managers' Indexes are the first official April data and show the extent of the damage to the economy due to the outbreak of the government's COVID-0 policies. Price stock bulls look to future and see nothing but bad news. It wasn't that long ago that investors were being pillaged of rushing into stocks while a pandemic was gutting the economy. Now, with earnings estimates booming a little in forecast to suggest a recession in hands, they can't bail out fast enough. Limitless optimism has been replaced in short 2 years by a precise sense of dread with inflation and the efforts of central banks to restrain its drowning out most other inputs. The result is months like April, one of the worst across assets classes in more than a decade, highlighted by a frantic rush to the exit among equity investors. War is making one of the richest countries even richer. Hosting the Football World Cup is a cup of Qatar, but it's Europe's hunt to replace Russian natural gas that will give the Gulf state real influence. As planes begin the descent into Doha, passengers can look down at the brand new 80,000-seat stadium, rising from the desert that will host the final of the World Cup in December. They may also notice another striking image: tankers lined up in the Persian Gulf to collect super chilled natural gas. Football and an increasingly indispensable fuel may have little in common, yet they are coming together to give Qatar outside influence as a global stage. As the World Cup showcases its ability to acquire international prestige, Qatar's status as much covered gas supplier is promising to turn the tiny peninsula into the bigger player it always aspired to be. Let's get to know what to expect in the markets this week. US equity markets lost ground this week, with the S&P 500 notching its fourth consecutive weekly loss on disappointing earnings reports, particularly from tech giants such as Apple and Amazon. For the week, the DOW fell 2.5%, the S&P 500 surged 3.3%, while the Nasdaq declined 3.9%. The three major indices declined in April, with monthly losses of 4.9% for the Dow, 8.8% for the S&P 500, and 13.3% for the Nasdaq. It was the first month for the tech-heavy Nasdaq since 2008. The 10-year US Treasury note yield ended the week nearly unchanged at 2.94% as yields fell early in the week, briefly touching a low of 2.72% on Tuesdays before easing later in this week. The price of WTI crude fell 0.8% on Friday, but rose up to 2.7% for the week at just over $104 a barrel, as energy tensions rose between Russia and the European Union. Markets were also affected by the prospect of most aggressive tightening by the Federal Reserve to rein in surging inflation, with a hike of 50 basis points expected during the Fed's upcoming policy meeting next week. Next week, we also can expect earnings releases from Lewis Fisher, AMG, S&P Global, Airbnb, Starbucks, AIG Prudential, Moderna, Royal Dutch Shell, and Uber, among others. Key updates on the US labor market will include the March jobs on Tuesday and April ADP National Employment Report on Wednesday. This will set the stage of the Labor Department non-farm payrolls report for the month of April on Friday. As many of you have doubts Why did Fidelity get into Bitcoin? According to the reports, Fidelity is one of the largest asset management and brokerages in the US due to its success and longevity. There was no need for it to explore the digital currency space until the mid-2010s, when investors began to develop an interest in cryptocurrency. In mid-October 2018, Fidelity launched Fidelity Digital Assets, a limited liability corporation designed to serve institutional customers and allow them access to the growing cryptocurrency investing environment. With this new branch, Fidelity entered into the digital currency game in a big way. Fidelity Digital Assets offers offline cold storage, custody solutions, trade execution, and other services. Using its clout as major financial services firm, Fidelity Digital Assets aim to help to provide financial institutions with full-service digital assets investments. One question likely on the minds of many investors is why exactly Fidelity decided to launch this new company. That's all for today. Thanks for watching.